Hey everybody, it's me, Gregory Mannarino, back for this freaking lovely day, Thursday, May 10th, 2018. I really want to cover a bunch of things with you because it's just too freaking stupid. Alright, well, I'm almost speechless here for several reasons. In the video that I did earlier today, I explained to you how, honestly, I heard from a lot of you today who just could not believe what you were seeing. I had suggested you go take a look at that chart of the bond market on my website, and if your eyeballs exploded, I am really sorry about that. We're talking bond buying, a massive rally here, which obviously sparked a nice rally in the stock market. The Dow Jones Industrial Average finished up almost 200 points. This is the same thing that we have seen. It's a pattern over and over and over again. And as you are well aware, the powers that be here are very powerful. They do not want that 10-year yield above 3%. They were very successful in keeping it below that today. Still, an incredible thing. So let's put another perspective on this real quick. So bond buying, incredible. The dollar, a unit of debt, got slammed, losing almost 0.5% value today. So a perfect scenario. The way that these central banks colluding with each other and with the Wall Street banks are able to produce, rig, however, the set of dynamics that are needed to prop up this stock market is frankly beyond belief. It really is. Not a peep today. Not one syllable that I heard of from the Confederacy of Dunces about the epic buying today with regard to bonds, which again sparked the stock market rally. And that weaker dollar, you all know that, is stock market positive. Gold put on a nice gain, silver put on nice gains because of that weaker dollar. They won't allow the dollar to strengthen people. They want you and me to pay more for everything. They will punish that dollar and prop up that bond market from here until they can't even do it anymore. It's just pretty wild. Now, another thing that they're not talking about on the mainstream, and they won't do it, and I went over this recently with the UK yield curve inversion. I just looked at it. Our yield curve continues to flatten out. Earlier today, I had posted how the spread between the 10 and the 30-year was 15 basis points. Well, it was 14.6 the last time I looked. So we're marching straight into that inversion, and they're making it worse by getting in here in the bond market, buying up those bonds, making sure that they are suppressing those rates here. Is causing that yield curve to flatten further. Understand why this is being done. And I've explained this to you as clear as I can, but let's go over it again. So the midterms are coming up here. President Trump wants stocks higher. It's the look here, don't pay attention to this kind of thing. So by suppressing those rates here, you obviously can't be in a bond, although there are some maniacs out here buying bonds that are paying nothing. If you factor in the actual rate of inflation, these people are losing money to invest their cash, in a debt instrument, locking up their cash for 10 and 30 years. You got to be absolutely on something that I can't even just talk about here in this video. It's the truth. Who would want to be in a bond when you could be in a stock or in a derivative of an equity derivative, and make, frankly, ridiculously stupid amounts of money? Speaking of ridiculous, stupid amounts of money, Well, today, right off of that chart on my website, I bought calls on SPY, closed them around 11 o'clock today. And, well, to say the least, I made kind of a stupid amount of money today. And this is what I hope you are doing as well. Use that chart. It's free. All right, so let's see. Debt got bought up like crazy, yet the dollar, which is a unit of debt, got dumped big time. Nice, perfect setup for stocks to go higher. It's a deliberate environment of risk that is being set up. There's nowhere else to go. Again, you can't be in a bond. You can't be in the dollar. They don't want you in cryptocurrencies. You know that. I mean, they got, I'm going to be nice here. They got a very nice person after very nice person after very nice person coming out here speaking out against cryptocurrencies as of late. I would rather be in Bitcoin and Litecoin and Ethereum and a couple of other ones than in dollar. Beyond anything you could possibly imagine right now. Would you rather be holding a dollar right now, or would you rather be holding a cryptocurrency here? If you answered the dollar, you need to have your head examined. That's the truth. All right, so again, this is a deliberate thing. It's being set up. Fake markets, hashtag fake markets. Start using this everywhere. Let's keep an eye on this, people, because we know where this is going to go. That is more propping up of the bond market, more flattening of that yield curve. Watch the spread between the 10 and 30. We're going to get an inversion at one point. Doesn't mean the market's going to crash at that time, people. Get that through your heads. I keep getting people writing to me about this, despite the fact that I cover this all the time. When we get an inversion, that doesn't mean the next day the market's going to melt. We have an inversion now in the UK. Their markets are not melting. There's always a lag time. The last two times we saw this happen, during the 2008 market crash and the dot-com bubble, was almost a year. So I'm not saying that's what's going to happen here, but I can promise you that every effort that you can think about and things that you can't even imagine are going to be instituted to keep the stock market moving higher up until the midterms. This is President Trump's guy, Powell, making sure everything stays in line. It's rigged. Rigged. All right? With that said, wow. I'll see you in the morning, everybody. Bye-bye.